Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueeney, content writer here at Zach's, along with one of our editors, Maddy Johnson.
Today is Friday, August 18th, and we're here to recap this week's biggest stories from the investment and financial world. We've got just a few more earnings reports to cover for you today. And it's also obviously been quite the week throughout the U.S., the U.S. of A., so we'll make sure to tell you exactly what investors need to know.
Yeah, before we jump in here, Maddy, I wanted to welcome you back to the show from your vacation. It feels like it's been a while since we had a regular episode in here.
It's been a few weeks.
So good time off. Had fun.
Thank you. I'm glad to be back. It's good to be back.
Wow.
It was really fun exploring the country, but it's good to be back here in Chicago.
Yeah, you did pick a really interesting week to return. I will say that. And we'll be touching on this week's political turmoil later in the show. But first, we had the big box retailers reporting this week. So let's start off with Target. Can you fill us in there?
Yeah, and I do remember a discussion we had about what's the difference between a department store and a big box retailer. Target is what I'm going to talk about in a few minutes. But big box, Target is just,
I read recently that the name came from the fact that the store looks like a giant box and has a lot of things in it. It's just like
slab of just like this huge building. It's just a rectangle. But now, as with Target is what I'm going to get into, they are renovating, they're innovating.
Yeah.
And they're making it look less like a rectangle.
Look less like a big box. So maybe we have to think of a different
I think we're going to have to think of we're going to have to think of a new term.
Yeah, I guess for years I just assumed that it was about like the kind of genre of retail store it was. It was like big box because you would need a big box to put things in because there's so much stuff.
But if you think about
the store looks like a giant box.
But if you think about like the old like Walmarts, for examples, like before they were super centers, when they were just a Walmart.
Yeah.
They were so boring and so ugly.
Yeah. Well,
and now they're revamped.
Into the Target remodel program in a sec here, yeah.
Quick, sorry for all that rambling, listeners. Target, one of my favorite stores ever. I'm going to a Target this weekend. It's already on my weekend to-do list. There's a new one that opened up on Belmont. It's very exciting when city Targets open up. But they reported their second quarter results on Wednesday morning earlier this week, and the company reported adjusted earnings of $1.23 per share, which beat the Zacks consensus estimate of $1.20 per share. And the company also reported revenue of $16.429 billion, surpassing our estimate by $147 million. Same-store sales, and this is one of the big metrics of their report, they climbed 1.3% in the quarter, and Target credited its store remodeling program for that lift. Target finished remodeling 42 stores during the quarter and will now work towards upgrading more than 300 new stores in 2018. So on the e-commerce side of things, and this is where Target is really trying to revamp and trying to renovate and hopefully... Finally, that's the thing. That's the key. So Target's comparable digital sales jumped 32%. And this is really huge for Target. Target has been investing in its delivery capabilities over the past year or so. And interestingly enough, the company announced the acquisition of delivery tech company Grand Junction. So great name. Did drive through Grand Junction, Colorado on my trip. Earlier this week, a move that will help the company develop a same-day delivery program. And I do want to note that Target and Grand Junction are already working together on a same-day delivery pilot program at one of Target's Tribeca stores in New York City.
Interesting. Something that many of its competitors have either a same-day program or something similar.
Yes.
Immediately thinking of Amazon and Walmart having same day, 2-day.
Same day
to
1
store.
hour.
Yeah, depending on where you are.
So Target finally jumping on the bandwagon. CEO Brian Cornell had a really interesting quote in this report. He said, quote, "We continue to focus on our long-term strategy as we work to transform every part of our business and build an even better Target. While our recent results were encouraging, we will continue to plan prudently as we invest in building our brands, our digital channel, and the value we provide our guests, end quote. And this is kind of a similar vibe he relayed as he did last quarter in Target's first quarter results, where he said, yes, results were good. It's where, we're on the right track, but we still can do better. I think that's a really positive, it's a good outlook to have. And Target also revised its guidance for the rest of 2017. So the retail giant expects fiscal 2017 earnings between $4.34 and $4.54, and it's up from previous guidance of $3.80 and $4.20 per share. Target also expects third quarter earnings to be in the range of 75 cents and 95 cents per share, which is on the high end of our consensus estimate trends. And shares of Target were up more than 1.5% on the week through Thursday afternoon trading.
Yes, and what was a difficult week for retail, so Target definitely sticking out from the pack there. I want to move on here to Walmart. We've already mentioned a couple times, obviously a key Target competitor and another major player, the major player in the big box retail landscape. Walmart reported its second quarter earnings results on Thursday morning. Walmart posted adjusted earnings of $1.08 per share, which just beat the Zacks consensus estimate, and prior year quarter's adjusted earnings of $1.07. Total revenues of $123.4 billion were up 2.1% year over year and ahead of our consensus estimate of $122.7 billion. Walmart U.S. same-store sales gained 1.9%, while Sam's Club comps rose 1.2%. Operating income was down 3.2% to $5.97 billion. On a constant currency basis, however, operating income was down just 1.6%, although I do want to note this operating income decline because operating income slipped at least partially due to the company's aggressive investments in its e-commerce business. This spending, as we will remember, all started last year with the company's $3.3 billion acquisition of Jet.com, and most recently, it includes the purchase of men's fashion retailer Bonobos.com.
Yes.
Am I saying that right? Bonobos? Bonobos?
It's Bonobos.
Okay.
It's like how you say the monkey.
Okay. Oh, that's a monkey.
It is a monkey.
Very
so
good point.
Funny story, little anecdote. When I was writing about this story originally and I needed a picture for my article, I was like, Bonobos in the Google image search. A lot of monkeys popped up. And I was like, I need to make this a little bit more specific. Bonobos retail store. Yes. And I just want to note that Walmart also now owns Moose Jaw, which is a popular outdoor retailer, similar to like Patagonia and REI. Well, not really similar to Patagonia. They probably sell Patagonia.
Yes, they do.
And they sell Canada Goose. And they also own Shoebuy and ModCloth. So Shoebuy is similar to Amazon's Zappos. And ModCloth is like this really cool vintage clothing online retailer.
Vintage. We're doing retro right now. It's very in.
Yes.
While we're on the topic of Bonobos, there's also a really great DJ and producer, deep house music producer named Bonobo. I have to shout him out. He's not listening, but shout out to my deep house heads out there. Anyway, continuing on with Walmart's report, management said that online sales, and this is why I wanted to highlight those e-commerce investments. Management said that online sales and gross merchandise volume were up 60% and 67% respectively. I did not misread that. That is not a typo. That's actually the online sales growth that Walmart saw this quarter. I did want to mention that the company did specifically credit organic growth through Walmart.com as a kind of catalyst for this growth, which I thought was interesting considering the investments in the other brand names that we just mentioned that they've been picking up. They still kind of put the spotlight on Walmart.com. And I think it's because of these new kind of ways that they're leveraging their physical assets, which we'll get to in 1 second. Walmart CEO Doug McMillon said, quote, "Our strategy is to make every day easier for busy families. To accomplish this, we continue our transformation to become more of a digital enterprise that moves with speed and agility. I'm encouraged by innovation in the business," end quote. That innovation he's talking about is kind of what I was just hinting at there. It's a lot of new ways that Walmart is testing out how to incorporate its store locations with its digital business. One of these new ideas is what it's calling the pickup tower. They're starting to roll it out this year. It's a 16-foot automated dispenser. Imagine like a giant ATM for products, for things that you bought online. It's a 16-foot dispenser, and it can hold up to 300 mid to small size packages. And basically what you do is you bring your digital receipt with you, your receipt from your online purchase, and you bring it into the store and you scan it, and then it shoots you out your package and it's there. And so Walmart said that 100 stores will have pickup towers by the end of the year, and they're looking to expand that onward.
Actually sounds kind of cool.
Yeah. So they're doing kind of new in-store pickup ideas. We've covered on the show testing out having employees deliver products on their way home after work for extra money. We saw Walmart in China, leveraging its partnerships in China to offer 2-hour delivery programs. So a lot of really interesting things going on. And I wanted to highlight the fact that they're doing that because it's a distinct advantage over Amazon, which of course does not have the same brick and mortar presence, doesn't really have a brick and mortar presence at all until this Whole Foods deal goes through. And, I think what we will see become kind of the shining example of how to compete with Amazon if you're a brick and mortar retailer. So, yeah, I thought that was the bigger picture. Walmart shares were actually down about 1.85, 1.7% on Thursday, which was interesting in, as we'll get to, kind of a sell-off across the board on Thursday. It'll be interesting to watch how that price moves today. And looking ahead, Walmart now expects comps growth of 1.5 to 2% in the quarter. That's U.S. comps. And the company also raised the lower end of its fiscal 2018 earnings guidance. They're in fiscal 2018, by the way. They're one of those companies that's just a year ahead on the fiscal calendar. Management now anticipates earnings of $4.30 to $4.40 per share, up from its previously announced range of $4.20 to $4.40 per share. So from both Target and Walmart, we saw beat and raises. So that's a good sign.
And I do want to say one thing. Here's the thing about Target and Walmart, at least what I've noticed recently, is that with Target, they're finally starting to realize that, yes, Amazon's like it's this huge threat. And they're starting to capitalize and they're starting to leverage, to use your word, I think the core draw of their brick and mortar store, which is Target is fun, Target is exciting, Target has like this design and this aesthetic that Walmart does not have. Customers want to go to Target, right? And even though that their comparable store sales didn't really reflect that in the past, Target is starting to kind of translate that
into results.
That desire to go to Target, that Target, into results now, right? They're starting to branch out into the digital, into the online, into the e-commerce. The thing with Walmart is that customers don't necessarily want to go to a Walmart store.
Yeah.
They need to.
Yeah.
Right? Walmart's like that store that it's kind of the only thing in town. It has everything that you need. It has health and beauty. It has groceries. It has lawn and garden. It has home improvement. It has everything.
Yeah. And it's not even so much as, I guess need to is definitely one way to put it. More so like they can, because 90% of the U.S. population lives within 10 miles of Walmart. That's just like an outrageous thing.
And then they have the best prices, arguably, compared to its competitive prices compared to its rivals. So when Doug McMillon says that, quote, our strategy is to make every day easier for busy families, that's what they're doing, and that's what they're excelling at. And even though Amazon is doing that too, Walmart is able to reach a broader audience, I think.
Well, I mean, certainly the convenience factor is a major, major benefit for Walmart. Like I said, 90% of the U.S. population lives within 10 miles of Walmart. That's like insane to me. So yeah, I totally agree. I think Target and Walmart, they're these big box retailers, but they have kind of their own individual pros and cons. And if you look at this battle against against Amazon, you have to perfect what you do well. target the in-store experience, the store remodeling program. It looks like they're trying to do that. Walmart, the convenience factor, looks like they're trying to leverage that. So it'll be interesting. I mean, I think these were two good reports, and I think Walmart only didn't benefit from the report initially because of the overall tough day that was Thursday, which I guess we'll get into now.
Yep. So in today's market environment, days like Thursday have been rare. Our major indexes were down across the board, with the Dow slipping about 0.85% and the S&P 500 losing more than 1%. The tech-heavy NASDAQ, however, was the biggest loser as the index slipped nearly 1.4% on the day Thursday. Tech stocks were being dragged down thanks, at least partially, to the disappointing earnings results from industry giant Cisco. Cisco, I think, reported on Wednesday afternoon. Cisco's earnings and revenue figures were in line with our consensus estimates here at Zacks, but they were down year over year to the tune of 3% and 4% respectively. So with a market cap of about $160 billion, Cisco is the 9th heaviest weighted stock on the NASDAQ Composite Index. However, the index witnessed several other major slumps, perhaps because of the week's intense political environment.
Yeah, definitely. Nearly all of the big tech names were down on Thursday, and that includes Apple, Microsoft, Facebook, Amazon. As you mentioned, the NASDAQ Composite Index is a market cap weighted index. So all of those big names carrying a heavy weight. The tech sell-off comes just one day after President Donald Trump announced that his American Manufacturing Council and his Strategy and Policy Forum were disbanding in the wake of his controversial comments on last weekend's tragic events in Charlottesville, Virginia. Controversial, I think, might be a soft word even to use to describe the comments, after being criticized for an initial response that seemed to imply, quote unquote, many sides were to blame for the violence at Saturday's white nationalist rally. Trump doubled down on his argument during a surprise impromptu press conference on Tuesday, which caused several notable CEOs to resign from his councils in protest. It was a classic you can't quit, you're all fired type of situation, although JP Morgan CEO Jamie Dimon seemed to imply that everyone was going to quit regardless of whether it was kind of a mutual disbandment. It was one by one. It started over the weekend with the initial response on Saturday that was, to put it lightly, questionable in nature. There was kind of a more calculated response on Monday that specifically named and condemned the white nationalists and neo-Nazis in attendance. And then on Tuesday, a bit of an off-script press conference with, again, kind of reverting back to this rhetoric of many sides being to blame, there being very fine people in attendance at Friday and Saturday's white nationalist rallies.
And why not take George Washington's statues down as well?
Some interesting...
And Thomas Jefferson, because, quote, they own slaves too.
Yeah, so some potentially false equivalencies there. Yeah, wasn't a good week for, I'll say it this way, wasn't a good week to be a Trump advisor. Definitely fueling...
that picture of John Kelly was hashtag clap.
Fueling the revenues of Advil and Tylenol in this country, dealing
so
with their headache.
like this council departure, if you will, it started with the Merck CEO. And then it just snowballed.
Yeah. My favorite part, too, was within 24 hours, there was the tweet about, for every CEO that leaves, I have another CEO to fill in. And then the next day, just getting the whole council is being disbanded because nobody wants to be a part of it anymore. And I'll remind everyone out there, these councils were Trump's idea. They're not per se normal.
No. And they were a good idea.
Yeah, it makes sense.
It made sense,
definitely.
I think, for a president coming in that didn't have a lot of political experience to have good advisors, CEOs come in an advisory role.
Yeah, definitely.
From a business background.
I agree. And it was a sign that the businessman president was going to take the advice of his fellow businessmen and women out there. Not a great look when the businessman president loses the confidence, I think Wall Street, of the nation's top executives. And Wall Street was, I think, ready to blow all week because of it. And then the fallout of the disbandment and then the unfortunate tragic terrorist attack in Barcelona on Thursday created what was just a remedy for a tough day on Wall Street, as you said. What has been rare to see that amount of volatility.
They're basically seeing their pro-business agenda go just like fall down the drain.
Right. And that's kind of my, I guess, final point to ponder this week is considering the backlash that Trump received for his comments this week, not just from these chief executives and not just from the Democrats, not just from civil rights groups and average Americans everywhere, but also from the Republican Party leaders. Certainly not everyone, but notable names in the Republican Party publicly criticizing President Trump, including members of Congress. Are investors starting to lose confidence?
And many Fox News hosts.
Yeah.
But not Sean Hannity and not Tucker Carlson. They will stand by him until death do them part.
Certainly a tough week, even from traditional Trump supporters. I guess to finish my thought there, what are investors starting to lose confidence in the ability for the Trump administration and GOP-controlled Congress to get some of these policy initiatives, get any momentum started on them?
Sure.
The idea that tax reform is coming, that there's a big infrastructure deal on the horizon, these are things that the stock market has just kind of been assuming is happening for a while now. Obviously, the post-election rally has affected different industries differently, but it seemed like, and it still does to an extent seem like corporate tax reform is on the agenda. But if comments like these and reactions to these comments become more and more consistent, then it would seem like getting that agenda going is going to be difficult.
Well, that's the thing. I think that's what a lot of people are, well, maybe not a lot of people, maybe a lot of people on the internet are worried about is that, sure, this is what's dominating the news cycle, right? This drama, this mess, this mess about social issues and things that we should be talking about, we should be worried about, we should be upset about, but what else is happening that we aren't learning about, that we aren't talking about? So I think things are happening on the Hill in Washington, D.C. that maybe we aren't. Maybe this is me being really paranoid and really cynical. And
well, I think you nailed it, though, is at what point do we start becoming concerned that the social and cultural issues that we're having right now are going to devolve into an economic one? And I would have to imagine that the likes of Paul Ryan, the Mitch McConnells of the world, the people that see this window with the GOP president and GOP-controlled Congress, realize that it's not an incredibly large window of opportunity to pass their revolutionizing corporate tax reform bill that they've been wanting to pass.
Wants that tax reform.
Yeah, and investors do too. Investors do too, and it's been assumed that it's been coming for so long that I think you're starting to see some people going, maybe not. Maybe we've got some other things to worry about. Maybe after the healthcare bill kind of fell flat on its face, maybe this isn't going to be the busiest session of Congress of all time.
As easy as we had, or they had thought.
Yeah, that's a good way to put it. So I think that just about does it for us this week. As always, a reminder, if you felt that we missed something this week, or if you'd like us to cover a different story, feel free to email us at podcast@zacks.com. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. Thanks again for joining us, and we will see you next time on the Zacks Friday Finish Line.